Hello everybody. In the current affairs this week, the week ended 29th of September 2024. The big news globally, especially when it comes to the emerging market, was that the Hang Seng, which represents the Chinese markets, was up by 13% in just 1 week. And the benchmark Hang Seng reached 20,000, but it was much lower than its previous high of 33,000. The primary reason for this spike of the Chinese market was that the Chinese central bank has cut their interest rates by 0.5% and also reduced the cash reserve requirements for the banks which are lending to the economy. All these years, the focus of the Chinese government and the Chinese economy was that they would go for an infrastructure-led growth. They will pump money into infrastructure and that will drive the economy and the growth. But now, as what they have inferred is that that might not work because infrastructure has reached to a certain level and there have been crises on the housing sector as well in China. Now the focus of the Chinese government and the central bank is that to promote consumption, and through the way of promoting consumption, they will drive the economy. It is for that reason, over and above the cutting of interest rates, they have announced that they will be giving allowances to poor, allowances for having child in each family, and several other measures which is aimed at boosting consumption. It is akin to what developed economies do to boost consumption and thereby boost and ramp up their economy. The target of the Chinese government is that the growth of China is at least 5% on real GDP terms. This is important for the reason that over a period of last at least 4 years, the representation of the Chinese stock market in MSCI Emerging Market Index is on a reduction. 4 years back, in the benchmark MSCI Emerging Market Index, the weight of India was 8% and that of China was 45%. And now, the weight of India in that benchmark is 20% and that of China is 25%. So, with the passage of time, India as a market is gaining prominence over China. The valuations in China of the stocks and the benchmark are quite attractive and quite compelling for somebody to look at. The Chinese stock market is trading at just 11 PE. 11 times is the valuation of the Chinese benchmark, while as that of India, as we all know, is 21 times. So the Chinese market seems to be very attractive to foreign institutions who are looking at value buying, and especially at the times when the Chinese government and the central bank is taking measures to see that the Chinese economy starts doing good. Coming to India back home, the Nifty 50 reached its all-time high and was up by more than 1.5%. Nifty mid-cap was up by just 0.5%, and Nifty small cap was on a little decline. And this was a reflection of the way the fund flows were moving. As I said in the earlier part that there is a good amount of attraction of investments in Chinese stock, but India is not a laggard. FIIs have been buying in India, and this week they have bought stocks to the extent of more than 23,000 crores. While as domestic institutions invested in the Indian markets to the extent of more than 10,000 plus. So it is the FII money which is the major component of the driving seat in the stock market in India. And that is the reason why the large cap benchmark is on a rise. The two major sectors which were up this week was Nifty Auto and Nifty Metals. Both were up by 5% plus. This is a reflection of the kind of demand which might result out of the Chinese economy, which might start doing better and it might go for a revival path. As far as the commodities are concerned, once again good news for India. Brent crude was down by more than 4%, and year to date, in last 1 year, crude is down by more than 25%. Gold and silver were in a positive trend, both up by around 1.5% each. As far as the US markets are concerned, the US market was in a positive trend, but moderately positive, and the gains were sub 1%. We all talk about the future sectors of growth in India, and one of the sectors which come up for discussion is defense sector. When we look at the listed space insofar as the defense sector is concerned, we find that there are very few stocks and they are very richly valued. So the question which comes up in our mind is that where does the opportunity lie when we say that there is a lot of opportunity in the defense sector? The fact is that in last 5 years, there are at least 1,000 startups which have been registered and are working on the defense side. As we all know that the wars of the future, and even in the present times, it is technology which is fighting the war. The learnings from whatever is happening on the wars in Ukraine and the Middle East, it is technology which is giving an upper hand to the people who are fighting these wars. So it is this startup bunch of 1,000 startups who are going to write and ride the defense sector story of India in the times to come. Thank you. This is all for this week.